What's going on, guys? We're going to take a look at Tesla today. So Tesla pretty much finished flat. We have big investor day going on this week. What can we really expect from the price? Are some of you guys going to be looking to swing into this investor day? I personally would not recommend it. I've traded battery day. I've traded what was the other day that Elon had? I forget. But sometimes you're going to get a good move, sometimes you're not, right? Only thing I don't like about the overall market right now is that each and every single day there's only like 1 to 2 stocks that are really running, right? And it's like a lot of the other stocks are stuck in a very compressed range where they're kind of just slowly drifting down towards those bottom demand zones. And then they're not really breaking out and testing like the recent past week's highs, right? That's what I don't like about the overall market. It kind of feels like the market's getting ready to roll over. Now we haven't had big expansion channels to the long side or to the downside. So if you have been finding trouble, kind of setting your feet and finding trades that are going to be, beneficial to you to where you can get in and make some money, they're just not there. So if you're a type of trader, especially newer traders that is looking, you think that you're going to come into the market each and every day because the market is open and make all kinds of money making 20, 30 trades a day. It's not going to happen in a market like this. You're only really able to kind of find those extended moves and those big money plays and 100% gainers like some of you guys like to preach and celebrate on social media when we're in a trend, right? When the ranges are not contracted, and right now when they're very, very small, unless you're a scalper taking 20 cents here or 30 cents there, you're really not going to get a whole lot of action and a whole lot of movement on those particular names. So right now is a time where you need to understand your not only macro levels but your intraday pivot levels as well. And if you guys don't really know how to understand or find those areas of supply and demand, join Evolution Traders. You're going to get access to 2 of my courses and be able to trade live with me each and every single day, and I kind of highlight these in real time with live commentary. But with that kind of being said, getting back to Tesla here, not necessarily a bad thing. There was a little intraday kind of pivot long that I took and it failed, right? So I'm going to outline that trade. There was an initial washout into some bottom demand, and then there was also a bounce play. Now the bounce play I did play, and that was a hell of a move in the 204s. I took that 204s, took that for a couple of dollars higher. But if you kind of look at where we stand, and if I go ahead and pull up this hourly time frame so we can get a better picture of exactly what happened today, so you can see initially right off the bell we started to kind of sell off, and we came down into this rising 20-day moving average and quickly reclaimed it, but then confirmed on the first hour candle. So one thing that I kind of preach is anytime we lose a level of demand, if you're kind of sitting here wondering why do you have so many lines on your chart, isn't price action key? And then that's what I hear a lot, right? So a lot of like newer like social media traders right now are saying you don't need all this garbage on your chart, simply play price action, supply and demand. And that makes sense, but if you have no idea kind of where these potential supply and demands are at, then you're kind of waiting and you're always behind, because in order for supply and demand to really work when your chart is very bare, you need price action to kind of get there, consolidate, back test, and then you can kind of mark out your demand. And then once it gets rejected multiple times intraday, you can kind of mark out your supply, and then you can kind of play those ranges, and then you can play either the breakouts or you can play the bottom fishing plays down when they get to demand, which is fine. That works, but I just don't like to use that because I would like to see already where potentially could stocks be heading. What are some of the big intraday levels? What are some of the big daily levels? And with all of these lines on my chart, I can kind of already know where stocks are going to stop and where they should go when they confirm, which makes it a hell of a lot easier to just get out of the trade when they stall. And I'm going to show you in a minute. So as we kind of see here, once we got this initial opening flush here, second hour of the candle here, did come back down into this demand. And now if you kind of look here, right, I just want to make sure you guys can see this. If you kind of look right here, there's a purple and yellow line here. This is a 50 EMA followed by the 150-day simple moving average. You see how we kind of broke this price action here and then wicked up? This area here is a demand zone. You have another one here at around 203, and you have another one here at around 202. Initially, I thought it would have been better if we kind of got into this 202, even 201 range. that would have presented a nice area to kind of bottom fish here and take the bounce play to go back up into area of supply, which is fine here. As soon as we got this 204 bounce, next hour candle kind of opened up, and all you have to do here is use this previous hour candle's low as your stop. Okay, so because if we can lose this line here, you can see obviously our potential is coming back down to 203, 202, and 201. So if I'm getting long in the 204s, I don't want to be sitting through $1, $2, $3 worth of drawdown, right? For a potential that I hope that it bounces. No, the play is over. So you have to get in at 204. You have to take this as your low of day stop here. You have to use this demand zone as, you know, your area of you know, concrete, you know, kind of levels to kind of go off of. And then all you're looking to do is really play this back into your next area of supply, because there's no telling that the Tesla is going to go ahead and break through and then, you know, kind of run back up to these pre-market highs. When you're scalping and you're day trading, all you're looking to do is catch little moves in between, right? In between supply and demand. You want to buy off the bottom, or you want to buy the breakouts, and then you kind of want to sell into the supply, or you want to take your profits into demand, depending on if you're long or short, and you kind of want to know where potentially you could be heading. But here's what I see a lot of new traders do. They'll bottom fish here, they'll get in, thinking that this is coming all the way back up just because we held, right? So I've heard some traders say, you know, we held low of the day, you know, we're coming back up. And some people don't understand where to be taking profits. So if you weren't smart and you just thought that, you know, tomorrow's investor day, we're going to just, you know, shoot up towards 220, 225, you know, by the time the day's over, you're pretty much almost break even, because we close at about 205. If you got in somewhere in the 204s, you're not really up that much. And with decay and price action, or in decay and the options premium, that can really kind of mess you up. Unless you're trading equities, that's a little bit of a different story. You're up about $1 and change, you know, come the close. But this play here is the play I was looking at long, right? So if we kind of look here at 10 a.m. Pacific Standard Time, we kind of came here, reconfirmed this 20-day moving average, and put in a new high here right at this 10-day moving average. That price was around 208.60 something. So what you want to initially see here is, I will go to a 5-minute chart, I will watch this price action break, and then I'm going to look at the level 2, and I want to make sure that the bid is holding over this area. And then I want to see a little bit of a pullback. And as soon as we get that little bit of a pullback and I see that this area is holding, you're going to go ahead and go long. So I seen the initial break, I seen the new high, I seen the pullback. We held this 10-day moving average on the hour chart, and then it kind of went up about 50 cents, right? And, you know, later on in the day, I don't play full size. I'll go down to around half size, sometimes even a quarter size. So, you know, 50 cents for me at that point in time on just a few lots was not enough for me to want to take that cash flow. Now, one point I'm going to make is that, you know, if you have a small account, and let's say you are only playing one lot, or you're playing one options contract, you know, when you get to after lunchtime and you get $40, $50, $60, you're going to want to lock in those profits, right? You're never going to want to take a play here late in the day after lunchtime and expect to squeeze $2, $3, $4, $5 out of Tesla. Now, my initial price target on Tesla was up here back towards this 211, 212. This should have went, and when this didn't go and it re-broke, and I'll show you on the 5-minute time frame here what exactly I was looking at, right? So when you see here this 208.70s, 208.60s, when we first initially broke this candle here, okay, when we broke that price action, and then we put in a new high and we started to retrace, as soon as this tape started to get weak and we didn't immediately explode into 209, 210, and it started to roll over, this was my indication to get out here once we lost the 5-day moving average. I hope you guys can kind of see that. But, you know, you have to assume price action was building. You know, I was watching the tape, and you could see that the bid was holding. Now, when this exploded on this candle, did explode with some volume, this should have exploded, came back down, right, held, and then it should have just went. And when it went, it should have easily broken through this 210 area up into this 211, 212 area. And this is what I wanted to see to kind of take some profits. And that was around, you know, 211 in some change, right? I was going to sell before 212, take some profits at 211. But when it doesn't, and it starts to stall, and you start to see the bid start to decline, and you start to see that price action getting weak, You don't need to give yourself a max pain of 1 point or $1.50. You don't need to let it break all the way down here and lose your full position. You can see and you can feel that this is not going to go. Just get out of the trade, right? So I got out of the trade here and I looked for the short. Now I looked for the short. Now I could have taken the loss of the 20 SMA here, but we had support right here, we had support right here, and we had this 50-day moving average on a 5-minute time frame here. What I did is I waited for this to break the 50-day moving average. I waited for it to bounce and get rejected once again, and then I took the flush with full intentions of taking profits down at around 205. So if we kind of look at my entry, I got in around the 206s, right? Low 206s, and I took about $1 off the stock. Again, not a big move. We're not looking for 5, 6, 7, 8, 9 points. We're just looking for that cash flow. We're looking for, you know, that kind of quick move, especially in a contracted market. I want everyone to really understand that in a market that is in a contraction zone where price action is reduced, it's you know, being contained, you know, we haven't broken out to the top side and we haven't really washed out to the bottom. You're just looking for cash flow moves, and depending on your account size, that could be 40 cents, 50 cents, $1. You have to just scalp, because those home runs, when you do catch Tesla for 5, 6, 7, 8, 9, $10, those type of days will come. But if you're constantly, you know, losing $3 or $4 here, getting in, losing $2 or $3 here, then when you finally do get those 5, 6, 7, 8, $9 runs, you're pretty much just breaking even. You're not making any money, if not losing money. So make sure we're either right around breaking even or losing, you know, a cup of coffee, which is a little bit of slippage. You know, if I'll just use a general example. If you're playing one lot size or one contract, which is, you know, 100 shares, and you're losing 20, 30, 40 bucks, consider that a scratch trade, right? That's not exactly break even at $0, but it's a scratch play, because you're going to get those trades where you get $2, $3, $4 on the stock, and that's going to be a $200, $300, $400 winner. So, you know, you can afford to take, you know, 2, 3 trades and lose $30, $40 here. But if you kind of wait, you know, 1, 2, 3 days for the markets to really expand and you catch those $3, $4, $5 winners, then that's how you're able to really grow your account and keep this business, you know, for the long term, right? A lot of times people will get in thinking that every day you're going to catch $4, $5, $6, and you don't, and you end up going down $3, $4, $5, $600, and then you just basically chopping yourself up. So if we kind of get into where Tesla can be tomorrow, right? 5-minute time frame, obviously after hours, we're trading right here down at this channel. We start to lose this channel here, and we really start to get down below 204, right? And we get down below today's lows here of around 203.69. We could be looking at around 200, 201, $200. And if we do get some sort of dramatic gap down tomorrow and we get an initial washout, look for that price, like that price point of around $200. If we go look at the hourly time frame, we kind of see here, where does that put us, right? If we look at $200, puts us right here at around this LR50 channel at around 201.59, and in between 199.65, which is going to be that 200 EMA. So if we do wash out, look for those two prices to kind of hold here, and then you can maybe see a potential run up tomorrow. Now, if we do hold somewhere in here between 202 and 203, which is a 50 SMA on the 1 hour time frame, look for an aggressive bounce, and our big play is going to be over 208 again. Okay, so this high here, that 208, 209 area, is going to have an easy push into 211.45, and as long as we clear out this price action from pre-market, you're looking at a 220, 218. Now, there was a ton of options buying coming in for 220s this Friday's, 220s next Friday's. So a lot of buying coming in for those 220s. Now, obviously, that's a lot of speculation for a good reaction off investor day, right? But the reaction could be different. Now, market makers do have a 14-point expected move going into this investor day and to finish this week. So if we kind of look at where does 14 points from here kind of put us, 14 points from 205 close today puts us here at the 200 SMA, which is 220. So if you kind of notice, why were they coming for the 220s? Well, if the market makers are expecting a 14-point move, that could potentially, you know, we could potentially come down here into the 199s, 200s, and then springboard, or we can hold the 5-day moving average at around 202, 203, and then springboard into 220. There's your 14-point move. Now, if we don't, and we kind of go 10, 12, 13 points to the downside, we would be looking to finish exactly where we started going back 2 weeks ago. Right, so it really does nothing for the stock. And if we do finish down here towards the bottom of the range at around the 100 EMA, again, guys, I would be fully confident to say that the market is going to get ready to roll over and do some continued more back testing, and I would look at 190 down to 179, 180. That would be the next price target. This would be your next expansion range, so you're going to want to be shorting Tesla during this range if going into next week we lose that 190. Okay, I hope this video makes sense. If you guys did like the content, make sure to like, comment, and subscribe. If you guys would like to trade with me and learn how I trade these moving averages and supply and demand zones, make sure to join Evolution Traders. I will catch you guys all on the next video.